about RBL Bank. The stock has seen an upward spiral since listing in 2006, which has been backed by phenomenal growth. The bank's asset quality is amongst the best in the business. As part of our special series, CNBC TV 18 Weekender, Lata caught up with the head honcho of RBL Bank, Vishwavir Ahuja, to find out if this growth is sustainable. Listen in.
This was a frenetic rate of growth you have shown in FY17 itself. What is it? Some 75% rise in EBITDA, a 40% rise in loan growth. Is this sustainable? I mean, even in 18, it's a big base that you have.
So our 6-year compounded annual growth rate, CAGR, is in excess of 50%.
Okay.
Close to 55%.
At an earnings level?
At balance sheet and earnings level.
Okay.
Both. Okay. So yes, earlier it was on a small base. We have, because of what I just talked about earlier, in terms of the business model that we have created, and we are actually therefore in the fast growing segments.
So you are scalable for 50%.
Scalable, yes. The third element was the service side, where we found the gap. That even today, research shows that at the customer end, service quality, service excellence, fulfillment is still a challenge even with the best and the biggest of them.
Yes, no two ways about it.
So there we actually started a internal cultural transformation of the bank, co-terminus with the branding of the bank, rebranding of the bank from Ratnakar to RBL Bank, where we said we should be the bank which will give the best service. And we will be like a relationship with responsibility. That's our sort of internal tagline. Yeah, understanding, knowledgeable, transparent, absolutely understanding the service dimensions.
Okay.
And that's how we created Apnoka Bank. I'm coming to that. So, scalable business model and focusing on service at the same time, is where I think we are at. The one area we have not talked about is the corporate space. Now, the corporate space, in terms of corporate lending, corporate banking, transaction management, cash management, foreign exchange services, that's something that is our traditional historical expertise. So, while not, aligned to what a new bank or a young bank would do, but because of our own network and relationships, we were able to get that going also.
Okay.
And take market share in that space. So while we are deepening and creating market and growth in the newer segments, in the corporate segment also, we are getting the 40-50% growth.
Okay.
Largely because of market share.
In the corporate sector now, of course, there is a problem. Even in the MFI sector, it has its own shares of NPLs, and corporate sector has had a tough time.
Yes.
How would you see the progress or the control of bad loans in the current year? You think that divergence problem is over?
We have maintained a gross NPA of under 1.25% throughout. Okay, we inherited a balance sheet which was more impaired. No point going into history, but we have maintained that, and I'm confident that we will maintain that going forward.
So even in the current year, you don't see any disturbances because of demonetization or aftermath?
I do. In the micro banking space, which has actually been a star performer for us in the last 4 or 5 years. In this year, calendar year particularly, I reported in our last quarterly result announcement that we are beginning to see some headwinds in that portfolio. But in line with what the rest of the industry is also facing.
Okay.
And there is some stress in that portfolio. We shared the numbers very transparently.
Yes, you did.
So having said that, that may create a 10-20 basis point bump.
That's all.
Okay. From that segment alone.
Okay.
And therefore, for the quarter, the coming quarter, and maybe for the next 6 months, the gross NPA may be slightly higher.
Okay.
But we are confident that by the time we end the year, we will come back to our, if I may say, long-term guidance or traditional guidance of remaining within that 1.25% gross NPA number, and with a net NPA of less than half that. So that's broadly in terms of the portfolio quality dimension.
Okay.
The portfolio quality aspect from day one is actually the gospel number one in the bank. That everything will be destroyed if the portfolio goes out of control.
Yeah, if the
so
quality
the risk
goes out of
management architecture of the bank and the rigor behind how we manage risk on an ongoing basis is very, very strong.
Okay.
So actually we have avoided the problems in the power sector, infrastructure, projects, some of the other sensitive sectors. Literally our thing has been zero.
Okay.
Yeah. So
not to worry about that.
Yeah. And looks that way, even going forward.
Okay.
Now coming back to your question on growth, we are confident about growth, even in the current year and in the next couple of years.
40%? That's what you did last year, that's why. No,
we have guided 30 to 35% in terms of our 3-4 year guidance.
Okay.
Our 2020 guidance says that
it is coming on a bigger base, but I just looked at the previous number.
Even on a bigger base, we are still guiding 30-35%.
Okay.
Yeah. And in our 2020 guidance that we will maintain that kind of CAGR, between say 2016 IPO and 2020, which is how we had created the indication. And either we will achieve or we will overachieve.
Okay, good. So I'm not very far from 40.